Hello guys, welcome to Bhavna's Online Academy. So today in this video we are going to learn accounting standard number 19, that is your leases. So in this video we'll be covering all the concepts of leases and also practical questions related to it. So stay till the end to learn it wholly. Okay, fine. So AS19 leases. So what is lease? Let's start with this term. What is known as leases? So if I say in a simple form, lease is nothing but it's like your rent only. Okay, now lease is nothing but like your rent only. Okay, fine. So in rent, what happens? There is one person and there is another person. So this person is suppose the, what do we say? We can call him the owner. Suppose this person is the owner and this person is the one who wants the asset whatever this owner has. Suppose this owner has a asset of an house. Suppose this owner has a house and this owner wants to give it on rent to someone else. Suppose he is the prospective person who wants to come to the rent to the house. So what will happen? This owner will give the house to him for the stay, and this person who is the tenant at the house, he will pay some money known as rent. So this is like a rental agreement. So here what happens? The person who is the tenant, this person who is the tenant, he gets the right to use the asset. Right to use the asset means right to use the house, right to stay in the house. Okay. And in exchange of that, he pays some consideration or we can say money to the owner of the asset. So this is what happens in a rent. Same way leasing also happens. Then what is the difference between renting and leasing? Okay, so here see. So rent and lease are almost the same, but there is slight difference between leasing and renting. So what happens in a rent is that it is for long-term stays, whereas leasing is for long-term stay, whereas rent is for short-term stays. Okay. Then leasing is actually a fixed agreement, whereas if you see rent, it is a month-to-month agreement. Okay. Then leasing is for set monthly cost, whereas in rent the cost can vary. So these are the few differences between lease and rent, but otherwise on a whole rent and lease are almost the similar only. Okay, fine. So now that you have understood in simple terms what is lease, now we will jump on to the meaning. So here it says in the meaning that transfer of right to use of assets. Transfer of right to use of assets for a specified period of time. What? For a specified period of time against some consideration. Okay. So what might happen here is that the same way you can take the example of rent itself. There is one owner of the house and there is one tenant. So what does the owner of the house does? The owner of the house transfers the right to use of asset or transfers the right to use of his house to the tenant. Okay. He will not give the house to the tenant for infinity. He will give it only for a specified period of time and again some consideration that say for monthly you have to pay me 10,000 rupees for staying in my house. So like that, for again some consideration. The same way leases can also be defined. It is nothing but transfer of right to use of assets for a specified period of time against some consideration or we can say money. Okay, fine. So meaning would have been clear to you. Next is parties. So like how you have owner and tenant in the case of rent, the same way you have two parties known as the lessor and lessee in the case of lease agreements. Okay. So here in simple terms, just for clarification, if I have to say here, lessor is the owner and lessee maybe you may call him the tenant here. Okay. So he's owner and tenant here, lessor and lessee. Okay. So who is the lessor? Lessor is the person who transfers the right. He transfers the right of use to the lessee. Okay. And lessor also receives consideration, whereas lessee will pay the consideration and he is the person to whom the right is being transferred. Okay. So this is the difference. This you would have understood. So here lessor is the owner and lessee is the tenant. Okay. So easily how you can remember lessor and lessee is that see. Okay. So here in lessor you have O. In lessor you have O. Whereas owner also starts with a O. So lessor means the owner, whereas lessee means the tenant. In tenant, okay. So tenant, lessee, you can understand there is no O, so he is the tenant-like person. Okay, so that's a simple way to remember it. Okay, fine. See, so what happens here? Lessor is there and lessee is there. Who is the lessor? Lessor O. Lessor is the owner of the asset. Lessee is the person who receives the asset for the using purpose. Okay, so what happens here is lessor has given his truck, or you may say a vehicle, to the lessee. Okay, so this truck which is given to the lessee will be known as the leased asset, the asset which is given on lease. Like how you call the house is given on rent, the same way you say here the asset is given on lease. So leased asset, so leased asset means this asset is known as the lease asset and it is given to the lessee. And in exchange of that, usually used to say that the lessee used to pay rent to the lessor, but now you have to say minimum lease payment. So minimum lease payment is what lessee gives to the lessor. In case of rent, now you have to use lease payments or minimum lease payments, you may say. And between the lessor and lessee, there will be known as something known as the lease agreement. Okay, so they will put in a lease agreement where they will state how much period they are giving, for what cost they are giving, and all of that. Okay, so this is basically what leasing is. So there are two types of leases. One is known as the finance lease and the other one is known as your operating lease. So there are two types of leases. One is the finance lease and the other one is known as your operating lease. Okay, so see, whatever, so for a finance lease they have given you, so for finance lease they have given you 5 conditions. So to identify which kind of lease is it, first what you have to see is, first you have to see finance lease. So in finance lease they have given you 5 conditions. If any one of the condition is also fulfilled, it will become a finance lease. If any out of the 5 condition, even if any one condition is also fulfilled, it will become a finance lease. In case all the 5 conditions or none of the 5 conditions are fulfilled, then it will become a operating lease. So I'll repeat it again. There are two kinds of lease: finance lease, operating lease. Under finance lease, to classify it as a finance lease, there are 5 conditions. Out of the 5 conditions, even if one condition is fulfilled, it will become finance lease. If none of the conditions are fulfilled, then in such case, it will become an operating lease. Okay, fine. So now let's move on to see what are the 5 conditions of financing lease. So now let's see what are the 5 conditions of financing lease. Okay. Okay, before seeing what are the 5 conditions of financing lease, let's understand the major difference between finance lease and operating lease. Now the 5 conditions that I told you, you have to use it in an exam perspective. Now, but in general, how do you differentiate between finance lease and operating lease? We have to see. Okay, so here I've put in an image. See, you have to see finance lease versus operating lease. You have to see whether all the rewards, okay, and risk, whether all the rewards and risk are transferred to the lessee or not. Lessee means the person who has got or who has received the asset on lease. Okay, has the lessee has all the rewards and risk related to what? Related to the asset, related to the leased asset, we can say. Has all the risk and rewards related to the leased asset transferred to lessee or not? If it has been transferred to lessee, then in such case it will be known as a finance lease. If all the risk and rewards related to the leased asset have not been transferred to the lessee, then in such case it will be known as the operating lease. Okay, so this is the difference between the both. Here the same thing only I have written here. So you have to see whether the lessor transfers the right to use and substantially all risk and rewards to the lessee. Lessor transfers to whom? Lessor transfers to lessee. You have to see. If it has been transferred, then in such case it will be a finance lease. Here the title may or may not be eventually transferred. Title here means the ownership. Title here means the ownership may or may not be transferred, but all the risk and rewards, if it has been transferred to the lessee, then in such case it will be a finance lease. So what they say usually is that finance lease is a kind of a sale. It is not an actual sale because the title may or may not be eventually transferred. But since all the risk and rewards are transferred, so finance lease is almost like a sale. Whereas operating lease is like your rent. Okay, always remember this. Finance lease is almost like a sale, whereas operating lease is almost like your rent. Okay. Yes, so this is the main part that you have to understand. Now let's move on to the conditions. See, for conditions, what you have to remember is even if only one condition is also satisfied, then it will be known as your finance lease. Even if only one condition is satisfied, it will be known as your finance lease. So here are the 5 conditions. So here are the 5 conditions. This is from the ICA book. This I have written it in a simpler form. The same thing I have written it in the simpler form. Okay. So the first condition, so how in this questions will be framed is that they will give you, see here when I read you the example, you will get to know. So they will give you one case like so and so has happened. You have to find out using these conditions whether it has fulfilled or not, whether it is a finance lease or operating lease. So in the exam, such kind of questions will be asked from this. So you need to understand the conditions properly to answer the question. Okay, so the first condition is that transfer of ownership of asset to lessee by the end of lease term. In case the ownership of the asset is going to be transferred to the lessee by the end of lease term, in such case what will happen? It will be classified as a finance lease, because see, if I have got asset, if I suppose I've got a truck, and after using the truck for 10 years, suppose the lease period is 10 years, if after using the truck for 10 years, if I'm going to also transfer the ownership to the next person, that means it is nothing but like your higher purchase only, correct? And by the end of the period, what happens? The asset gets transferred to the lessee itself. So here if the ownership of the asset by the end of lease term is transferred to lessee, in such case what will happen? It is going to be classified as a finance lease. So one more thing what you have to remember here is that this classification, whether it is a finance lease or whether it is operating lease, is done because there are different type of accounting methods. How you record it in your book are different for finance lease and it is different for operating lease. So when do you classify it as a finance lease or operating lease? Do you classify it as a finance lease or operating lease at the start of lease or at the end of lease period? At the start of lease or the end of lease? This is one question. Okay, so you classify it as a finance lease or operating lease always at the start of your lease only, at the starting, at the inception of your lease itself, you will classify whether it is a finance lease or operating lease. Why? Because then at that point, if you decide whether it is a finance lease or operating lease only, the accounting or the book recording according to whatever method it falls under, you can do. At the end of the lease, if from the start if you have done it like operating lease, and at the end if it is like a finance lease, then the accounting what you have done itself is wrong. So in such case, whenever they classify whether it is a finance lease or operating lease, they classify it at the start of the lease period itself. Okay, so then how will we know whether the ownership of the asset is going to be transferred to the lessee by the end of lease term? So this, they might have some kind of agreement between them that by the end of lease period, I will you will either purchase the asset or something like that. Okay, so if there is any condition like that, that surely the ownership of the asset is going to be transferred to the lessee by the end of lease term, then in such case, it is a finance lease. Second condition. Second condition is that lessee has the option to purchase. Who has the option to purchase? Lessee has the option to purchase what? Purchase the asset at a very reduced rate. So lessee has the option to purchase at a very reduced rate, and lessee is certain to opt for the purchase at inception itself. Okay. So lesser. So here what this condition is that. So let's start from here. So lesser thinks that, lesser means the owner of the asset. He thinks that lessee, he will give lessee a option to purchase at a very reduced rate. Okay, that means by the end of lease term, what the lessor is going to do is he is going to give the lessee an option to purchase at a very less rate. And the lessor thinks that the lessee will very certainly, he will definitely purchase. If the lessor thinks so, then in such case, he can classify it as a finance lease. Okay. So here see example. So what has happened is, in this example, Mr. A has taken a car on lease for 5 years from XYZ. So here Mr. A, who is Mr. A? Here Mr. A is the lessee, whereas XYZ is the lessor because he is the owner. Okay, car for lease from XYZ. After 5 years of the lease term, Mr. A has the option to purchase this car for 20,000. He has the option to purchase the car for 20,000, whereas it is assumed that car market value at the end of 5th year would be 2 lakh rupees. So what happens after 5 years? Mr. A will have an option to purchase 2 lakh worth of car at just 20,000 rupees. Considering the option to buy it at a bargain price, it is reasonably certain, you must at least be reasonably certain, that 85 to 90% certain that Mr. A would exercise the option. So these judgments and all you have to make at the start of the lease itself. Okay, so in such case, at the start of the lease itself, if lessor thinks that lessee will buy the asset if given at a very reduced price, if he is certain that the lessee will buy it, then in such case he can classify it as a finance lease. That was the second condition. Third condition. Third condition is that the lease period covers substantial period of economic life of the asset. It covers a substantial period of economic life of the asset. Suppose here what happened is that we'll take the example of the same car itself. Suppose there is a car. The lessor gives the car to lessee on lease. Okay. And the economic life or the useful life, as you call in accounts, or economic life, okay, or the productive life of the car is suppose 10 years only. And the lessor has given the lessee the car on lease for supposedly 9.5 years or 9 years, whatever, 9 years or 9.5 years. Suppose the lessor has given it to lessee for 9 years itself, then what happens here? The lease period itself covers the substantial period of the economic life of the asset. After 9 years, the lessor is going to get nothing from the car. Only 1 year he can use and then that's it. Here it is just like a sale only, that almost the useful life of the asset you have given it to the lessee. So here, if the 85 to 90% of the life has been given on lease, useful life of the asset is the lease period, then in such case it can be classified as a finance lease. Okay. Next, fourth one, at inception. At inception means at the start of lease. At the start of lease, if the present value of minimum lease payment, if the present value of, here I'll highlight it. If the present value of minimum lease payment amount to substantial fair value of the lease asset. So here what happens? Okay. There is one more example for the last point that we read. First, I'll explain you the fourth point, and then after that, third point example we'll go and see. So here what they tell you is, see, I'll see first there if there is example. No, there is no example, so I'll explain you. Okay. So fourth point. So in fourth point, what they say is you have to see whether the present value of minimum lease payment is amounting to, is either equal to or is substantially at least covering the fair value of the leased asset, fair value of the lease assets. So here how you can understand this is that today, suppose you are going to give the car on lease. Suppose you are going to give this car on lease. And today the value of car is suppose 5 lakh rupees. The value of car is suppose 5 lakh rupees. 5 lakh rupees is fair value. Okay. So the 5 lakh rupees is the fair value. So what happens is you are going to give the car on lease for about 5 years. 5 years you are going to give the car on lease to the lessee. You are going to give the car on lease to the lessee. What happens is that in 5 years, every year you are going to, the lessor is going to get some money, or we can say lease payments. Minimum lease payments means it is nothing but your, like how you pay monthly rent. Like the same way, yearly they are going to pay something known as lease payment. Okay, so that is what is minimum lease payment, nothing but like your rent only. So every yearly the lessee has to pay the lessor, what do they say, minimum lease payments. So if all the 5 years you are going to pay an amount to the lessor, And what you do is, suppose you suppose you bring all the 5 years value to today's value. That is, if you calculate the present value of all these 5 years value and bring it to today's terms, suppose if the total of all these lease payments is around 4,95,000 today, that is the present value of all these. Present value of all these future values are suppose 4,95,000. That means the present value of MLP, that is the present value of all these 5 years lease payments, if it is around 4,95,000 and the fair value is 5 lakh today, that means what happens is that today the value of asset is 5 lakh. What the lessor is doing here is that over the lease period, he is recovering the whole amount of the asset. Almost 4,95,000 rupees he has recovered. That is, it is substantially equal to 5 lakh. Only 5,000 difference, right? So, substantially equal to the fair value today. So, in such case, this will be classified as a finance lease. So, in simple terms, what you have to see, whether the lessor is recovering the whole amount or the fair value of the asset that is there today by the lease period and the lease payments. If all the present value of the minimum lease payments today is either equal to or substantially equal to the fair value of the lease asset, then in such case it will be known as the finance lease. That is 85% and above. If it covers 85% and above, then in such case you can call it a finance lease. Okay. So in this point, if you have any other doubt, while we are doing the sum, it will get cleared. And the last fifth point is that leased asset is of specialized nature that only lessee can use it without any major modifications. So here what they tell you is that the leased asset, suppose they have leased a truck or a mini van. Suppose what we are going to take as, suppose the leased asset is a mini van. Okay. So in such case, what happens is that what the lessor has done is, the lessee is suppose a hospital. Here the lessee is a hospital, suppose. What the lessor has done is, he has converted this minivan into a ambulance for the lessee. Okay. The lessee wanted to take the minivan, but the lessee or the hospital people told that, see, you have to convert the minivan into ambulance and give us, then only we'll be able to use it for our hospital. So what the lessor done is, the lessor have converted this minivan into ambulance and have given it to the hospital. Okay. So it is of a specialized nature, right? This minivan has been converted into a specialized nature, that is of an ambulance. Okay. So what happens is, suppose what happens is that after the lessee has given back the lessor the ambulance, after the lease period, suppose the lessee gives back the ambulance to the lessor, then in such case lessor will not be able to use it for any normal purpose. He have to again convert the ambulance into minivan. Correct, because he will have to remove the siren, he have to take out the hospital beds that has been set in, he have to put in a proper seating like a minivan. So many changes this lessor will have to do. Major modifications he will have to do if he had to bring it to the normal form or to give it to lease to someone else, because someone asking for minivan will not take ambulance with them and go. Correct. So here in case the lease asset is of a specialized nature like this, that only lessee can use it without major modifications. Only the lessee or the hospital people can only use it without major modification. Any other person who has to take it at least have to again modify it into a minivan only. So in such case, if it is like that, if it is that sort, then in such case it will also be known as a finance lease. Okay, here we will take example. See, PQR, hospital example. PQR, hospital ordered 10 ambulances, specially designed as per the requirement of PQR. These ambulances are taken on lease and it cannot be used by anyone else without any major modifications. This would meet the condition of finance lease. Okay. So I hope you would have understood this. The third point example I told I will read and show it to you, but whenever you get time you can go through your ICI module and read it by yourself. So these are the 5 conditions. So among these 5 conditions, even if any one is getting fulfilled, then in such case it will be known as a finance lease. I hope there is no doubt in this. Okay. So now let's move on to the next concept. Okay, 1 minute. It's not working. Okay. Okay, fine. So now let's start with the next concept. So the next concept what we are going to see is it is related to finance lease only. Operating lease at the end we will see. Okay, it is related to finance lease. So under finance lease we are going to see the books of lessee. Lessee means a tenant person. Okay. So books of lessee. So the books of the person who has got the asset on lease. So his books now we are going to see now how to account in his books. Okay, fine. So the first word is lease liability. So the first word that we see here is known as a lease liability. So what will happen in question is that in question they will not directly tell you that prepare the books of lessee or find any value according to the lessee or find any value according to lessor or prepare the books of the lessor. There are few keywords that the question is going to use to indicate whether you have to do it according to the books of lessee or do it according to the book of lessor. Here, one of such keywords is lease liability. If in the question they are going to mention it as a lease liability, that means it is in the books of lessee. That means it is in the books of lessee. So, if in the question it is stated that lease liability, it means that books of lessee. Okay, fine. Yes. So, what is the first accounting entry is that so it is asset account debit to lessor account. So once the lessee receives the asset from the lessor, what he will do is he will do asset account debit because he has got the asset and then from whom he has got it from lessor. So to lessor account. So asset account debit to lessor account. Here what is the amount that you are going to write? That is one confusion that people usually have. So what is the amount you have to write here? Here you have to write lower of present value of MLP from the point of view of lessee, from the viewpoint of lessee. Okay. Okay. So it is lower of present value of minimum lease payment from the viewpoint of lessee or fair value of the asset or fair value of the asset. This is like one of the conditions we read, right? 4,95,000 and 5 lakh, whichever is lower. So like that, from that condition only. Here, so it is either lower of present value of minimum lease payment from viewpoint of lessee or fair value of asset. Fair value of asset usually it will be given in the question. Where you will have problem is that present value of minimum lease payment from point of view of lessee. How do we find out this present value of minimum lease payment? Present value also we know how to find out. Whatever the future value is that into discounting factor. Okay, if you do, you will get the present value. But you would need to know what is the minimum lease payment from the point of view of lessee to find out the present value. So how will you find out the minimum lease payment from the point of view of lessee is that, see, this is minimum lease payment from the point of view of lessee. So it is nothing but whatever the lease payment is there. Okay, so whatever lease payment is there, it is just like your rent. So whatever yearly lease payments are there, plus guaranteed residual value by lessee or on his behalf. So guaranteed residual value by lessee or on his behalf. That means by the end of lease term, if someone has guaranteed to the lessor, if the lessee or any other third person, if the lessee or any other third person has guaranteed to the lessor that they would give this residual value to him. Suppose if the lessee has told that 50,000 rupees I will give you for the asset, or any third person has told the lessor that 60 or 70,000 rupees I will give you for the asset. So whatever the guaranteed, so it must be guaranteed that 100% they would be giving to the lessor. So guaranteed residual value by lessee or on his behalf. If anybody has given it to the lessor, if anybody has certained it to the lessor for the asset, then that will also be added. So minimum lease payment. Minimum lease payment from the point of view of lessee is the lease payments which is there yearly plus guaranteed residual value. This is also known as GRV, guaranteed residual value by either lessee or by any third person. If anybody has given any guarantee that this much residual value we are going to give for the asset, then in such case we can add that also. Okay, so this is the minimum lease payment from the point of view of lessee. Whatever amount you get here, you have to find the present value of that. If you find the present value of that, then in such case it will become the option A. That is the present value of MLP from the point of view of lessee, or fair value of the asset. So now what we are going to do is, now we are going to do a sum related to this. So you are able to understand the statements better. Okay, so this is the question. So here they have given you annual lease rents. Annual lease rents is nothing but your lease payment, which you saw here. Lease payment, this is nothing but your lease payment which you do yearly. Annual lease payment is 50,000 rupees at the end of every year. Lease period is 5 years. Guaranteed residual value is 25,000 rupees. Okay. Unguaranteed residual value is 15,000. So here when we are going to find out the lease liability when we are going to find out, we don't need a unguaranteed residual value. We only need guaranteed residual value and lease rent. Okay. So fair value at the inception or beginning of the lease is 2 lakh rupees. Okay. Interest rate implicit on the lease is 12.6%. What is this interest rate? What is this interest rate implicit on lease? 12.6%. This is nothing but your discounting factor which you have to use to find out your present value. This is your discounting factor which you have to use to find out your present value. So in this they have told you to calculate the value of lease liability as per AS 19. So whenever they use the term lease liability, you know it is the lower of. So here I already told you, see, lease liability means it is in the books of lessee. So it is nothing but the lower of present value of MLP from point of view of lessee, or fair value of asset. Okay. So fair value of asset, it's already given in the question. Fair value is nothing but 2 lakh. Either this or lower of PV of MLP. So PV of MLP, how we are going to find out? So first let's find out MLP lessee. So MLP lessee, what is there? It is nothing but lease payments. I'll write short form here. Lease payment plus guaranteed residual value. Okay, so lease payments and guaranteed residual value. Okay, first let's write this here. 1, 2, 3, 4, 5. For the first 5 years. So because lease period is 5 years, and every year you are going to pay a lease payment of 50,000. So this is nothing but lease payments. All these 50,000, 50,000, 50,000, 50,000, 50,000, 50,000 for 5 years. Then finally, at the 5th year, the lessor is going to receive a guaranteed residual value of 25,000 rupees. So we have written that also. Okay. So now what did I tell you? So now what did I tell you? That you have to find out the present value of all of these. ML, this is the total. So 2,75,000 is the total. So 2,75,000 rupees present value you have to find out. Okay, so that you are able to compare it. So present value of MLP lessee you are going to find out. So present value, how you will find out? You will use the discounting factor and find out. So discounting factor 12.6%. So for year 1, year 2, year 3, year 4, year 5, they have given here. And if you multiply these both, then MLP and discounting factor, then in such case you will get the present value. So the present value here what they have got is 1,91,500. 1,91,500. So how did they get 44,500? They did 50,000 into 0.890. So how did they get the 0.890? I hope that you know. Okay, that is very basic. If you don't know, you can go and search on YouTube or any other site that how do you find out discounting factor. Okay. So if you multiply this, you will get 44,500. Okay. So all of these, if you total, the present value of MLP is going to be 1,91,500. That means 5 years, during the 5 years or by the end of 5 years, the MLP lessee is 2,75,000. But whereas the present value of these 2,75,000 is 1,91,500. So now you have to use the formula. Present value of MLP, it is 1,91,500. Fair value of leased asset, it is 2 lakh rupees. So whichever is less. So what is less here? 2 lakh or 1,91,500? So 1,91,500 is only less here. So in such case, how will you put the accounting entry here? Asset account debit to lessor account. 1,95,000, 1,95,000. So here the lease liability is nothing but 1,91,500. Okay. So I hope you understood this first accounting entry and how what value you have to put it and how you have to find out that value. Okay. So I hope there is no doubt in this. Okay, fine. So the next concept that we are going to see is the next accounting entry. It is the finance charges. So what is the finance charges? In simple terms, if I tell you, see here in simple terms, if I have to tell you, what happens is that, so we'll take this example itself. The total value that you are going to pay, the total, one second, okay, it was 2,75,000, right, total, okay. So the total value that you are going to pay to the lessor is 2,75,000. The total value that you are going to pay to the lessor is what? 2,75,000. But what is the present value of this 2,75,000? It is 1,91,500. What it is? It is 1,91,500. So the difference between 1,91,500 and 2,95,000, there is a difference. Why is there a difference? Okay, because what happens is it is like the interest that you are paying him. It is like the interest that you are paying to the lessor. Okay, suppose if you get a bank loan, today the bank loan what you have got will be only 10 lakh only. But until you pay by the end of 10 years plus interest, if you pay, you will be paying around suppose 15 lakh. Then what is this 5 lakh rupees? If you only got a bank loan of 10 lakh rupees, you must only repay 10 lakh. No. Why do you repay 15 lakh rupees? Because the bank charges some interest. Okay. That is like this 5 lakh rupees. So this is nothing but the same concept applies here, which is known as the finance charges. The finance charges is nothing but like your interest only. Okay. So what happens is that the entry here is lessor account debit, finance charges account debit to bank. To bank, why means lessee is going to pay to the lessor using bank account only. So how much you are going to pay to the lessor and what are the finance charges included in it? Plus what is the total amount you are going to, to what the total amount you are going to pay. For example, we'll take here 1, 2, 3, 4, 5. Okay, so 5 years, let's take 1, 2, 3, 4, 5. What is the amount that you are going to pay to the lessor? If you see a gross amount, what is the gross amount that you are going to pay to the lessor or what you have recorded at inception? That means this is the first entry. In first entry, how much are you paying to the lessor here? 1,91,500, right? So the same we are doing reversal here. The same entry we are doing reversal here. So lessor, how much are you recording? 1,91,500 only you are recording. But the finance charges here are 33,500. So the total amount that you pay to the lessor or via bank, the lessee what he pay via bank to the lessor is that 2,25,000, is it? It is not 2,75,000, then it might be 2,25,000. I am not sure. We have to again add. So it is, yes, sorry, it's not 2,75,000. I made a mistake. And it is 25,000 only. No, so it is 2,25,000. Okay. So it is 2,25,000. So what we have recorded in the books at the starting is 1,91,500 only according to our first entry, but the lease liability. But along with that, you are paying some finance charges through the period of 5 years. Okay, that is nothing but 33,500. So a total of 2,25,000 you are going to pay via bank. So this is your second entry. This is the entry for finance charges. So lessor account debit, finance charges account debit to bank account. Okay. So I hope this you would have understood. Now let's see a sum related to it. Okay, 1 minute. Okay, fine. Here also I'll just make a change. Okay, we had written it wrongly here. This 25,000. Here it is 75,000. Is it? So in this question, okay. Okay, now. Okay, now. let's move on to a question related to finance charges. Now let's move on to the question related to finance charges. You are going to move on to the question related to finance charges. Okay, fine. So here, what they tell you is that, so we'll take that the total lease liability, the total value that you are going to pay to the lessor is 2,75,000. But the present value or the amount of inception or the amount that is recorded at inception is only 1,91,500. Okay. The total amount that is going to be paid over the 5 years is 2,75,000. But the amount that is recorded at inception is 1,91,500 only. I told you that in such case the finance charges will be like the interest only and it will be 83,500. Okay. It is going to be 83,500. Okay, fine. So here what it happens is that, okay guys, so I've just realized that I made a few mistakes here. It is not 2,25,000, it is 2,75,000 only. So whatever the changes are, I hope you have understood the concept properly. Okay, so now here what happens, so now we are going to find out the finance charges for each year. What we are going to do is we are going to find out the finance charges for each year. The total finance charges you have found out that it is 83,500. Total finance charges, you have found out that it is 83,500. Okay, now if I ask you the total, that is 83,500 is a total finance charge over 5 years. It is like a 5-year interest, total interest. Now if I tell you to find out what is the yearly finance charge or what is the yearly interest, how are you going to find it? So that only we are going to learn now. Okay, so the yearly finance charge, how will you find out? So finance charge yearly if they tell you to find out. Okay, so what is the year? Year 0, 1, 2, 3, 4, 5. Okay, how you will write like this. Then the minimum lease payments will be given in the question itself. It is 50,000 in first 5 years. Here it is nothing, the 75,000 which is written here, it is nothing but 50,000 plus 25,000 GRV. Because GRV also you get at the end of 5th year, right? So all these, so total of 2,75,000. Okay. So the finance charge, it is nothing but your interest rate which was given that 12.6 percentage. So how will you find out all these? I'll tell you. So the second column is finance charge 12.6 percentage. Then you have principal, then principal due. Okay. So here the principal due is 1,91,500. So totally you have to pay 1,91,500. Okay. That is your gross value that you have to pay. Okay. So what happens here is that, so in the first year you pay. So in the first year, here you pay, 1 minute. Here you pay 50,000 rupees. Here you pay 50,000 rupees. So in this 50,000 rupees, both your principal amount is also added as well as your finance charges is also added. That means as how you do for a bank loan and all. Whenever you make installments or payments for bank loan, in each installment there will also be a principal value and there also will be an interest value. The same way, whenever you make a lease payment, there will also be a finance charge included in it and there will also be principal amount included in it. So in this 50,000, finance charge is also there, principal amount is also there. So first let's find out in this 50,000 how much finance charge is there. So your interest percentage, or you can say finance charge percentage, is 12.6 percentage. So on what amount will you calculate this 12.6 percentages? On 1,91,500. So 1,91,500 rupees you have to pay an interest or a finance charge of 12.6 percentage. So 1,95,500 into 12.6 percentage, 12.6 percentage, it is 24,129. So 24,129 first year it is your finance charge. So if you have paid 50,000 rupees, out of which if 24,129 is your finance charge, the remaining 25,871 will be your principal amount. 25,871, how did I get? 50,000 minus 24,129. Okay. So this you will get your first year principal paid. So the remaining principal what you have to pay is 1,91,500 minus 1 lakh, one second. 1,91,500 minus 25,871. it will give you 1,65,629. So this is the remaining principal due. The same way in the second year you are going to pay a minimum lease payment of 50,000. So how much is the finance charge that you are going to pay that year is nothing but whatever the principal due is there, it is nothing but, we'll take a different color. So it is nothing but 1,65,629. So on this 12.6 percentage you will pay as finance charge. That is nothing but 20,869. So out of 50,000, if you have paid 20,869 as finance charge, the remaining 29,131 will be a principal. So again you have to do the same thing. Then how much principal have you paid? That is 1,65,629 minus 29,131, 1,36,498 will be your principal due. So the same way you have to do till the end, till the fifth year. If you do, what will happen? Your minimum lease payment total will be 2,75,000. The finance charge that you have paid over 5 years will be 83,500. That is your total finance charge, and principal amount will be 1,91,500. Okay, so here as you can see, this is, so these are the what do you call, so these 24,129 is the finance charge for first year, 2869 for second year, 17,199 for third year, 13,066 for fourth year, 8,237 for fifth year. So this is the finance charge that you pay yearly, and the total finance charge, if you add all these, will become 83,500. So I hope you have understood how to calculate finance charge yearly also. This table you have to practice once or twice so that you are able to understand. So what will be the entry for finance charge? So in year 1, what will be the entry? So what is entry usually? Lesser account debit, finance charge account debit to bank. Okay. So first year, what will be the entry? So how much principal you are paying? 25,871. So lesser account debit 25,871. Finance charge, how much you are paying in year 1? So in year 1 you are paying 24,129. And to bank, to the lesser, how much you will be paying? 50,000 rupees. So lesser account debit, finance charge account debit to bank. In lesser you will write principal amount, how much you have paid. In finance charge you will write the finance charge amount for the first year, how much you have paid, and in the bank account you will write your lease payments. Okay, so I hope this entry is also clear to you. The same entry only they have bifurcated and written in our ICA book. You can also follow this entry and write this. Okay, so I hope finance charge is also clear to you. Okay, so I hope finance charges is also clear to you. Now we are going to move to the next case of finance charge. Okay, so there is a special case. Once again. Okay, so there is a special case for finance charge. The special case is where the fair value of the asset is greater than, here the fair value of the asset is greater than, fair value of asset is lower than present value of MLP lessee. So what will happen here if the fair value of the asset is less than MLP lessee is what we are going to understand now. Okay. So now below you can see a example. So in our case, in what the case we were doing here, the fair value of asset was 2 lakh rupees, and the previous case I am talking about, and the present value of MLP lessee was 1,91,500. So here the fair value of the asset was greater than MLP lessee. But now we are going to see the opposite case of this. What if the fair value of asset is less than? It is less than present value of MLP lessee. Okay. So suppose MLP lessee is 2,75,000. Suppose it is 2,75,000. Okay, and discounted at the rate of 12.6%. The present value of MLP lessee will be 1,91,500, and the fair value was 2 lakh rupees. Okay, so this was our usual case. Okay, So here, since this was lower, we considered this as a lease liability. Since 1,91,500 was lower than 2 lakh rupees, we considered it as a lease liability and used it as a base for calculating our finance charges also. So using 1,91,500 only, we kept it as a base and calculated our finance charges, correct? Okay. So this is what we have done until now. But now what happens is, now in case your fair value is 1,50,000. So what will happen? So it will be either 1,50,000 or 1,91,500, whichever is lower. So in such case, what will happen? This will be, this 1,50,000 or fair value will be lower than PV of MLP, because PV of MLP is 1,91,500. So 1,50,000 will be lower than this. So therefore here in this case what will happen is, your fair value 1,50,000 will be your lease liability. It will be your lease liability. Okay. So now what will happen is that since your 1,50,000 has become your lease liability, see this, you'll understand. Wait, okay, we'll take a gap here. Okay. So till now, what were you doing for finance charges? What were you doing is, you were doing 1,91,500. This was your lease liability plus your finance charges gave you your MLP of lessee, that is 2,75,000. Till now this was only happening. If you take this case, here you can see 1,91,500 plus your finance charges. Here it is given wrongly. Wait. Yes. See here, 1,91,000 plus your finance charges would give your MLP of lessee, that is 2,75,000. So this was how you found out your finance charges. But in this case now what has happened is that, here what has happened is, your lease liability is 1,50,000 only, because 1,50,000 is lesser. So 1,50,000 plus the finance charges will give you 2,75,000 now. So this statement has been changed here. So 1,91,500, it has been changed to 1,50,000. So what happens here is that, so 1,50,000 plus finance charges will give you your 2,75,000. This is nothing but your principal plus interest will give you 2,75,000, your whole lease amount. Okay. So now for this, what you have to do is, first you can find out your finance charges. So in this case, what will be your finance charges? So what will be your finance charges is 2,75,000 minus 1,50,000. So 1,25,000 is your finance charges here. So 1,59,000 is your finance charges here. Okay. So this is the total finance charges. Now in case question asks you what is the yearly or what is the each year finance charges. So you found out your total finance charges 1,25,000. How? You did 2,75,000 minus 1,50,000. The balance amount will be your finance charges. So the balance amount came up to 1,25,000. Now you know that the total finance charges 1,25,000. But in case question tells you to find out yearly finance charges, then in such case how will you find out? So you would need to know your yearly, suppose in case if we take this finance charges as your interest, then yearly interest rate you must know, correct? Then only you will be able to find out your yearly interest amount. If you know the interest rate only, you will be able to find out your interest amount. Same way, for finding out yearly finance charge, you would need to know the interest rate. What is the interest rate? If you know only yearly what is the finance charge, you will be able to identify. Here in the case of 1,91,500, 12.6% was your interest rate. Now since 2 lakh, now since it has become 1,50,000, you have to find out 2,75,000 discounted at what percentage will become 1,50,000. Okay, so that will give you your finance charge of 1,25,000. Okay, so now here first what was the equation? First the equation was, see here, 1 minute. So first what was the equation here? So first the equation was that 2,75,000, if it is discounted at 12.6%, it gave you 1,91,500. The same way, now you have to find out if 2,75,000 is there, discounted at what percentage will it give you 1,50,000? What percentage will it give you 1,50,000? You will have to find out now. Okay. So how are you going to find out this? So how are you going to find out this is what we are going to understand now. In your financial management, you would have read the concept of IRR. Okay, the same concept only we are going to use here. Even if you don't know that, it's okay. I'll make you understand. Okay, now let's come to this question. Okay. Now let's come to this question. So it is the same question as we have seen above. Okay, the same 2,75,000, that same question only. So what happens is the question is same as above, except that implicit rate of return is 10% per annum. That is, they have already given you that the implicit rate of return is 10% per annum. You have to calculate the finance charges. So here what has happened is that they have told you, so now you have to find out the same thing. Lease liability you have to find out, then yearly finance charge you will have to find out. So the first step would be that you calculate your PV of MLP lessee. Okay, so when you calculate your present value of MLP lessee, okay, what you are going to do is you are going to form the same table year. So there were 5 years, year 1, 2, 3, 4, 5 and 5. So 50,000 is your each yearly payment, and last year on the 5th year you get your guaranteed residual value of 20,000. Now to find out the present value of the MLP lessee, here what happens is that, so until now you were finding it out at 12.6%, but now in the question they have changed the rate of return or the interest rate you can say, and they have given it as 10% per annum. So now you have to discount it at 10% per annum and find out your present value. So 10% per annum, it is, they have, see, I hope you know how to calculate this. So they have given this and they have multiplied the MLP into discounting factor and found out the present value. So here the present value is 2,05,025. So it is 2,05,025, the present value. So now what you have to do? You have to do present value of MLP lessee or fair value of the asset, whichever is lower, and that will be your lease liability. So present value of MLP is 2,05,025, whereas the fair value of the asset is 2 lakh rupees. So whichever is lower means here the fair value. Here the fair value of the leased asset is 2 lakh rupees. Here the fair value of leased asset is 2 lakh rupees. Okay. So here what accounting entry you will write? Asset account debit to lessor account 2 lakh rupees, 2 lakh rupees, because whichever is lower only that amount you have to write. Okay. So now if you find out the total finance charges, what will be your total finance charge? Can someone tell me? What will be the total finance charges? It will be nothing but the total amount which you are going to pay through 5 years, which is 2,75,000, minus the amount that you are going to record at inception. That is your lease liability. It is nothing but 2 lakh rupees. So your total finance charges is 75,000 rupees. Okay. So your total finance charges is 75,000 rupees. Okay. Now the 75,000, how you are going to pay yearly, you have to find out. So the yearly finance charge you have to find out. So for that we would need to know what is the interest rate. Okay. So here everybody might have a doubt. So until now we were easily calculating yearly finance charge. Now why are we in a need to calculate a different rate? I'll explain it again. So in the previous question what used to happen is that present value of MLP lessee was found out at the rate of 12.6% and it was around 1,91,500. Okay. So here now what have happened is the present value of MLP lessee was found out at 10% and it has come as 2,05,025. Now in the previous cases what happened was PV of MLP lessee was lower. 1,91,500 was lower than 2 lakh rupees. Okay, it was lower than 2 lakh rupees. So we had no problem. At the same rate itself, we used to calculate the finance charge also. Okay. But now what happened? When we compare the PV of MLP lessee and the 2 lakh rupees fair value, here what happened was that this 2 lakh rupees of fair value was lower. So at 10% if we discounted, the amount came up to 2 lakh 5,025. So see, when we discounted 7 lakh 25,000 at 10%, you got the amount as 2 lakh 5,025. Now what you have to find out is the same 2 lakh 75,000, at what percentage will you discount to get 2 lakh rupees? Because this is the lower, right? So to what percentage if you discount 2,75,000, you will get 2 lakh rupees. This is what you have to find out now. In the last question, what happened? 2,75,000 was discounted at 12.6 percentage and it gave out 1,95,000. Sorry, 1,91,500, and the same thing was used as your lease liability. So here no problem, already you have the rate. But when the lease liability is the fair value of the asset, that is where the problem arises. Okay, so in such case you don't have a percentage and now you have to find out a new percentage for it. Okay, now see, the lease payment is 2,75,000, whereas the present value was 2,05,025 when it was discounted at 10 percentage. Now you have to find out at what percentage will 2,75,000 become a present value of 2 lakh rupees. Okay, fine, yes. So this you have to find out. Okay. So how are you going to find out? So recomputation of implicit rate of return is what we are going to do, or recomputation of interest rate. You may call it anything. Okay. So first what you have to do is you can take any percentage. Okay. You can take any percentage. Here they have taken 12 percentage and started with the question. So you can take any percentage. Okay. So here 1, 2, 3, 4, 5, 5 you can do, and all the minimum lease payment they have written, and finally GRV they have written, and then they have discounted it at 12 percentage. So when they discounted 2,75,000 and found out the present value, if discounted at 12 percentage, it came up to 1,94,425. When they discounted it, it came up to 1,94,425. Okay. So what they tell is if they discount it at 12 percentage, it came up to 1,94,425. And when it was discounted at 10 percentage, it came as 2,05,025. Now you have to find out what percentage when it is discounted, you are able to get 2 lakh rupees. This is what you have to find out. See. Here clearly it is given when it was discounted at 10 percentage, it was 2,05,025. When it was discounted, when it was discounted means when 2,75,000 was discounted. So when 2,75,000 was discounted at 12 percentage, it came up to 1,94,425. Now you have to find out at what percentage it is discounted so that you can get 2 lakh rupees. Okay, so this how you can get, I am going to show you. Okay, a easy method. Okay, fine. Yes. So what you can do here is that, see, when you find out the difference, wait. Yes. Okay. So when you find out the difference, first you can find out the difference between 10%, wait. You can find out the difference between 2,05,025 and 2 lakh. The difference is 5,025. Now, if you find out the difference between 2 lakh and 1,94,425, the difference is 5 lakh 5,075. Okay. So, this is the difference. And then if you find out the difference between 10 percentage and 12 percentage, that is between 2,05,025 and 1,94,425, the difference is 10,600. The difference is 10,600. Okay. So what happens is for the difference of 10,600, for the difference of 10,600, the difference in rate is 2 percentage. That means if there is an increase in 2 percentage, there is a difference of 10,600,000. I mean 10,600. So if there is a difference in 2 percentage, there is a difference in value of 10,200. So now what you can do is, now you can tell if the difference is going to be 5,025, what must be the rate difference? Then what must be the rate difference so that you can find this? I'll explain you this again. Clearly understand. To move from 10 percentage to 12 percentage, the difference is 10,600. The difference is 10,600. Now, if you have to move to a point where you can get 2 lakh rupees from 10% to the point, then here the difference is 5,025 rupees. Then at what percentage will we arrive here? That is what you have to find out. So if the difference is 10,600, the difference in rate is 2 percentage. The same way, if the difference is 5,025, what is the difference in rate? So if you cross multiply, you will be able to get. So 2 into 5,025 by 10,600. That means if there is a change in percentage of 0.948 percentage or 0.95 percentage, then you will get 2 lakh rupees. Okay. So I hope you would have understood this. So 10 percentage plus the difference, then it will be 10 percentage plus 0.95. That means 10.95 percentage is the percentage where you get 2 lakh. Where you will get 2 lakh as your value. Where you will get 2 lakh as your value. Okay. Or the same way you can also do it this way. So 12 percentage minus what percentage if you do, you will arrive at this percentage. So how you will find out? Here the difference is 5,575. So 5,575 is the difference. If you, for 2 percentage, for the change in rate of 2 percentage, if the difference is 10,600, for how much percentage will the change be? 5,575. If you find out this, it will be 1.05%. So 12 percentage minus 1.05%, 10.95% again you will get. So either you can go this way, either you can go frontwards or backwards. Whatever way you go, you will arrive at the value of 10.95%. So 10.95% is the percentage where 2,75,000 is discounted and brought to a present value of 2 lakh rupees. So 10.95 percentage is the percentage, or is the interest rate at which 2,75,000 can be converted to a present value of 2 lakh rupees. So now using this you can find out your finance charge. So how will you find out your finance charge? So here minimum lease payment, finance charge at 10.95 percentage, principal due. Okay, so here 0, 1, 2, 3, 4, 5. So the same way your minimum lease payments, and here minimum lease payments plus GRV you can write. Okay. So the principal due is 2 lakh rupees. So the principal due is 2 lakh rupees. Okay, because whichever is lower will be your principal due. So or lease liability. So 2 lakh rupees it is. So in 2 lakh rupees what happens is, you pay in the first year, you pay a minimum lease payment of 50,000. Okay. Then in that 50,000, how much is the finance charge? How is the finance charge calculated? It is principal amount into interest percentage. So principal amount is 2 lakh rupees into interest percentage of 10.95%. You will get 21,900. So if in 50,000, 21,900 is your finance charge, remaining will be your principal, that is 28,100. Okay. So now how much principal has been paid? 2 lakh minus 28,100. So 28,100 has been paid. So the remaining principal due is 1,71,900. In the second year also same way, 50,000 is paid as minimum lease payment. In that what happens? How much is your interest? Your interest will be the principal amount. So here the principal amount is 1,71,900 into 10.95 percentage, which is 18,823. So in 50,000, if 18,823 is your finance charge, the remaining will be the principal, which is 31,177. Okay. So how much principal has been paid in the second year? 31,177. So the remaining principal to be paid is 1,71,900 minus 31,177, which is 1,40,723. So the same way, if you compute, you will get your whatever the yearly finance charge. So this is your yearly finance charge. Correct. So this is your yearly finance charge. So in the first year you pay this much, second year, third year, fourth year, fifth year, and totally you pay a value of, sorry, and totally you pay a value of 75,000, and totally you pay a value of 75,000. So yearly, how will you book these entries? So yearly, how can you book these entries? I taught you in the last question, I believe. Yes. So here, see, it is. So it is going to be lesser account debit, finance charge account debit to bank account. So how much do you pay against the principal amount? It is 28,100. This is for year 1. How much finance? See, here 28,100. How much finance charge do you pay in the first year? 21,900. See, 21,900. Yes, 21,900. Then that means the total to the bank, how much you are paying to the lesser? 50,000 rupees you will be paying. Okay, so this is how you will record your finance charges. Okay. Yes. So I hope all your concepts until now has been covered. So this was the first part of our AS19 leases. In the second part, I'm going to cover finance lease in the books of lesser and also operating lease, and then sale and lease back. So these three concepts I'll be covering the part 2 video. So stay tuned for that. It will be coming out by tomorrow or either day after tomorrow. So I'll bring it up very soon. So I hope you found this video helpful. If you did, please do like, share and subscribe to the channel. And also leave a comment down below on what other AS do you need. I'll try to bring all of them as soon as possible. Thank you.